Hello and welcome to another video on cash and cash controls. In this video, we're going to work on two exercises dealing with bank reconciliation statements. Before we do that, let's go through a quick overview of what is involved in preparing a bank reconciliation statement. The goal over here is to find the reconciled amount, which is also called the adjusted to the true cash balance at the end of the period. So you could have timing differences or errors that are uncovered through this reconciliation process in order to find the adjusted to the true number. So we have two sides, what the bank says we have and what our ledgers, our books say we have. On the bank side, there could be typically two timing differences. One is deposits in transit and the second is checks outstanding. And if there are bank errors, we need to make that adjustment. It may be a plus or a minus. On the other side, where we have the balance as per our books, we may have items where we need to add, that is, if the bank has added money to our account already and we haven't done that, or if the bank has taken money out of our account and we haven't updated our books. Pay close attention to the NSF checks. These are always, if we have those, they are bad checks that we have received from customers. And again, we may have errors that we identify. These are bank error, company errors that we have made and we need to make corrections. Again, this is a control. This is being done for the purpose of control. Now, with that taken care of, let's take a look at the exercise. In the first exercise, we have Spielberg Company that says that the general ledger shows a checking account balance of $22,970 on July 31st, 2021. So first thing I'll do is I'll create the heading over here. In the heading, I have the name of the company, name of the statement, and the date. So Spielberg Company Bank Reconciliation Statement, and it's July 31st, 2021. Now I can go ahead and write down this basic information over here that on both sides, I have the end goal is to find the adjusted or the true cash balance. Either word is acceptable. We have balance as per the bank on one side and balance as per books on the other side. However you present it on the left and right hand side doesn't matter. Just be consistent so you remember it. So to start with, they say that the general ledger says that we have $22,970. So that's what our books say we have, $22,970. So I put that number there. The July cash receipts of $1,885 included in the general ledger account are placed in the night deposit of the bank on July 31st and processed by the bank on August 1st. So on July 31st, I already said I have that money in my account. The bank does not have that as yet, so I will add that, deposits in transit. The next day it's going to get into my account. The bank will clear it. But as of now, the bank has not done it, but that money is in fact mine. Next, we are told that the bank statement dated July 31st shows a bank service fee of $55. So the bank has already taken $55 out of my account. I need to do the same in my books. I need to subtract $55. So on the side where I have balance as per our books, I will write less bank service fees, and the amount is $55. And because it's less, make sure you put the number in parentheses so you remember to subtract it. Then we are told that the bank processes all checks written by the company by July 31st, and it lists them on the bank statement, except for one check totaling $1,460. So all the checks that we wrote have cleared the bank, except one, which means there's one that for whatever reason is not yet cleared, and it's quite possible I sent the payment to my vendor and the vendor has not deposited it as yet. So when they do, this money is going to be taken out of my account. I've already taken it out over here from my books. The bank will take it out as soon as the vendor presents it. Again, it's a matter of time before that happens, so I need to subtract that money over here. And then finally, we are told that the bank statement shows a balance of $22,490 on July 31st. So balance as per bank is $22,490. Now, in this case, this is all we have. It's a fairly simple exercise. Now, let's make sure that everything is well, as in we add up the two columns and we should come up with the same number. So on the bank side, I have 22,915. When you add up these two numbers on the book side, you should come up with the exact same number, the 22,915. This is the number that will be presented in the balance sheet. Now my ledger is showing this number. I want it to be this number, which obviously means I need to make an adjustment of $55, and we'll see how to do that. Now I have to do it by way of a journal entry in order for it to change the number in the balance sheet. So this journal entry will be done on July 31st, 2021. Cash is credited. I know cash has to be credited. The amount is $55. We know that. The only question is, what account would I debit? Either you could debit bank service fees, or it's very common for smaller amounts, miscellaneous expense is going to be debited. Operating expense or miscellaneous expense, as long as you debit an expense, we're fine, because that takes the effect of saying this is a bank service fee. It's an expense which goes into the income statement, and my cash decreases by $55. So now that we're done with this exercise, let's take a look at the next exercise, which is very similar to the previous one. So let's read through the exercise real quick and then see how we would set it up. On August 31st, 2021, the general ledger of the Dean Acting Academy shows balance of cash of $7,944. So I know the name of the company. Name of the company is the Dean Acting Academy. This is a bank reconciliation statement, and it's being prepared on August 31st, 2021. On this side, I'll have balance as per bank statement, and on the other side, I'll have balance as per our books. So this number they're telling us the balance as per our books is 7,944. So I put that number over there. Let's continue reading. Cash receipts yet to be deposited into the checking account are $3,338. So this is monies that I have on hand. I have not deposited the checks. When I deposit them, they're going to be added to my account. So it's a matter of time, as in I may have closed the books. I may have, the bank is closed, but I'm still finishing my books, and this is deposits in transit because I have the checks in hand over here. Okay. We have written out checks, but these have not been processed by the banks. Now, this is an example where we have written checks. We have credited cash in our books, but it has not yet cleared the bank. And when it does, we will be short by $1,425. We won't be short as in we already know that we've made the payment, but the bank account will decrease by $1,425 and those checks clear. The company's balance of cash does not reflect a bank service fee of $35. Again, the bank has already taken money out of my account. I have not done that, so I need to do that $35. Okay, and the last thing is interest earned on the checking account is $46. So the bank has added $46 to my account. I have not done it, so in the books, I will add this interest revenue because I earned it, $46. And then finally, the amount included in the balance of cash, the balance of cash of $6,042 is reported by the bank. So the bank statement is saying we have $6,042. Now, we have all the information in place, and let's see what we come up with as a true cash balance. We add up each of the two sides, and we should come up with the same number, which we do, 7,955. Now again, in my books, I had 7,944. On August 31st, when I prepare my after my bank reconciliation statement, I'm getting ready to prepare my balance sheet. This is the number I need to have in my balance sheet. So how do I do that? I will do journal entries. I need to do two journal entries, or I could combine it as one journal entry. We will debit cash, and that's $46. $46 was added. Cash is debit. And the reason we got $46 is because we earned revenue, interest revenue credit. Now, you will have one more journal entry, And this journal entry is for the bank service fees, miscellaneous expense debit, cash credit, and the dollar amount is $35. And we need to have the date again over here. This is being done on August 31st, 2021. So let me change the date over here. This is August 31st, 2021 for both of these, the journal entries. You could combine the two journal entries, but it's always neater to keep them separately. If you combine the journal entries, you're just looking at a net cash debit or credit, how you would do that, but just keep those separate. So we've looked at two quick examples where we've seen where changes need to be made to our cash account. It needs to be updated, and we want to make sure that there are no mistakes. Now, in this case, in both the exercise we've looked at over here, there were no mistakes reported. But if there are, we'll see how to take care of them in a future exercise.